Dear students, I have come with a new module, module 21. This is about computation of leave salary. So this concept itself, the name itself is funny, leave encashment. Now what is leave encashment? An employee is entitled to different types of leave. Casual leave will be there, earned leave will be there, sick leave will be there, maternity leave will be there. Like that, so many leaves are there. For some companies, what they will do, casual leave, usually 15 days a year. So if they are not utilizing that, they can carry forward that. Whereas in the case of, it will be credited to, or it's like a bank account. If imagine you have utilized only 5 days of casual leave, 10 days can be carried forward for next year. So some organizations, they will allow to encash it at the time of retirement, or whenever they will announce a policy to encash that. Encash that meaning, if I have 30 days leave at credit, then it's equivalent to 1 month's salary. So this is in the private sector. So if it's government sector, they have the concept called earned leave. Now what is earned leave? If you are a government employee, 10 days earned leave you will get. 10 days earned leave you will get in a year. So the advantage is that you can accumulate like a bank account. See, if you are exceeding your casual leave, usually casual leave can be taken only for 3 days. If you are exceeding your casual leave for 4 days or 5 days or anything like that, including Sundays, including public holidays, it will calculate. Imagine you are taking a casual leave on Friday and you are reporting only on Wednesday. That meaning Friday, Saturday, Sunday. Monday, if you are reporting, it's within 3 days, it will be considered as casual leave itself. If you are reporting on Tuesday, that meaning you cannot claim casual leave. It will go from our earned leave only. So this calculation will continue at the time of service, and whatever balance available, so that will be encashed at the time of retirement. Sometimes government will announce for government employees in between. See, before COVID, they have announced that leave encashment is possible. But because of the COVID-19, the financial constraints, they cancelled that policy. So in between, government will announce whoever want to encash that. So they are able to do that. So this is the concept of leave encashment. Working continuously, not utilizing your leave, and the company or the organization or the government is compensating for the leave you have not utilized. That is the concept of leave encashment. So I hope it's clear. Now what is the tax treatment? Tax treatment, you have to remember, for state government and central government, it's completely exempted if you are receiving at the time of retirement. Whereas you have to remember, if it's a government sector employee or a private sector employee, if you are encashing while in service, it will be taxable. Third point is, for private sector employees, whenever they are receiving, it's fully taxable. Whether in service or at the time of retirement, it's fully taxable. But for government sector, if you are at the time of retirement, if you are utilizing it, it will be completely exempted. Now tax exemption, this you have to remember, out of the amount received, least of the 4 items will be exempted. So that 4 items I will tell you, but one more important thing, anytime if the amount is handed over to the legal heirs, it will be completely exempted. So for government sector employees, if they are receiving at the time of retirement, it's completely exempted. If it's paid to legal heirs also, it's completely exempted. Now what are the 4 items? Actual amount received. Actual amount received. So now less least of the following items. One is actual amount itself. Actual. Second is statutory limit of 3 lakhs. This you have to remember, statutory limit, while in service also it's possible to encash. So if you are encashing for the first time, this will be the limit. If you are encashing second time, whatever exemption you claimed, minus 3 lakhs will be the statutory limit. Third is leave at credit at the time of retirement. Leave at credit at the time of retirement into average salary. I will explain with the problem how you calculate that. Then 10 months average salary. 10 months average salary. So these 4 items, least value we will take, and that will be the exempted encashment. Exempted value then taxable will be actual minus exempted. This is the computation. Computation is simple, so we have to calculate that. Now important points are there. So this is clear. Actual amount we will write in the outer column. The four values from where we have to take the least item we will write here. One is actual value itself. Second is statutory limit. That statutory limit you have to remember, if you have claimed any time before, that will be reduced by that value. Then leave and credit into average salary. Then 10 months average salary. Least value you will take and then taxable leave encashment you will get. Now important points. Important points you have to remember. Leave and credit, how you calculate. Number of years of service into 1 month minus leave availed and encashed during service. I will explain during, see for example, some companies, government sector it's standard 1 year of service, meaning it's 30 days. Whereas some private companies are giving 45 days. Whatever they want, they can give the employees that as a leave encashment policy. But for income tax purpose, one completed year of service, 30 days. That is how they will calculate. So in the problems you can see that employer is allowing 45 days. But our calculation will be based on 30 days only. So 20 completed year of service. And he has encashed 15 months of leave during service. That meaning leave and credit is 5. It's very simple calculation. At the time of problem also I will explain. Now average salary is equal to 10 months salary preceding the date of retirement. Imagine an employee is retiring on December 31st, 24. December 31st, 24. So that meaning 10 months preceding salary we have to take. That will be from March 1st, 24 to December. That is December, November, October, September, August, July, June, May, April, March. 10 months. There are two types of retirement. This we have taken the example. End of the last date of the month he retired. It is possible to retire on in between the month also. Imagine he is retiring on December 15th, 24. So his 10 months we will calculate date wise. So this is very important, you have to remember. So here it will be March 16 to March 14, 24 to December 15, 24. This will be the calculation. Date wise you have to see. See 10 months preceding the date of retirement. So December 14 to November 14. Like that you have to calculate 10 months. So two types of retirement possible. When you get a problem you have to see that whether he is retiring at the end of the month or whether he is retiring in between the month. Both the types of problems I have included. Two problems I will work out on end of the month he is retiring. One will be in between the month he is retiring. Now salary is equal to basic salary plus DA under the terms of employment. That meaning if it's mentioned that it's entering into retirement benefits plus commission based on fixed percentage of turnover. So meaning of government employee meaning central government employees and state government employees. First problem we will do. It's very simple computation. First problem you have to remember. Mr. X retired on 1st July 24. 1st July 24. 1st July 24. After completing 18 years of service and received 7,50,000 as full amount of leave encashment for 15 months. 18 completed year of service is 18. And he has received 15 months salary. His employer allows 45 days of leave for every year of service. This we don't have to consider at all. For our calculation income tax purpose, 1 year of service is equal to 30 days. During his service, he has already encashed 12 months of leave. This is also important. So your leave at credit is 6, 18 minus 12. So you have to remember how many years he has completed. Any fraction of the month we will not consider. Only full years only we will consider. So fraction of the month, if 18 years and 2 months, we will take only 18. 18 years and 11 months, we will take only 18. So fraction of the month we will ignore, full years we will include. And how much encashment he has done during service. So this is 6 is the leave at credit. Now calculate the taxable amount of leave encashment if his salary during 1/7/23 to 1/7/24. 1 year it was 50,000. So we need not to calculate average salary. It's directly given. Now you can see that how we will calculate this. See, actual amount received. Actual leave encashment received. Leave with credit is 6 months. I hope it's clear. 18 years of completed year of service and 12 months he has encashed. So 6 leave months is the leave with credit. Now actual encashment is 7,50,000. Actual amount received. Now less least of the following. So here again actual will come 7,50,000. Now statutory limit. He has not claimed any leave exemption before, leave encashment before. So the full value. If he has claimed anything before, he had to reduce this value. Third is 10 months average salary. 10 months average salary. 10 into 50,000. It's directly given in the question. So here it is 5 lakhs. 5 lakhs. Now fourth point is leave at credit into average salary. So leave at credit you calculated 6. 6 into 50,000, 3 lakhs. So here least value is 3 lakhs. This 3 lakhs, this 3 lakhs. So 3 lakhs you will exempt. Now the taxable leave encashment is 4,50,000. Taxable value is 4,50,000. So first problem we completed. Second problem we will take fraction of the month he is retiring. In between the month he is retiring. In between the month, question is Mr. K retired on 13/2/25 and that is February 13 and received 18 lakhs as leave encashment for 15 months. He served for 20 years and his employer allowed him 45 days of leave for every year of service. So completed year of service is important, that is 20. His salary for the calendar year 24 was 1,10,000 per month and it was raised to 1,25,000 per month with effect from 1/1/25, January 1st, 25. His salary is due on the last day of the month. So two options for salary payment, either first day of the next month or last day of the same month. So his case is payable at the last day of the month. Compute his taxable amount of leave encashment. This problem, date of retirement 13/2/25. 13/2/25. Now first we have to calculate the leave at credit. Leave at credit, how you calculate? He has completed, this is different problem compared to the previous problem. Information is different. What he has, and he has not encashed anything. So 20 years of service, 20 into 30 is equal to 600. Now for 15 months only his employer has paid 18 lakhs. So 15 into 30, it is 450. Now what is his leave at credit? 600 minus 450 divided by 30. That is equal to 150 divided by 30 is equal to 5 months. This computation, because earlier problem computation, it was easy, we can subtract and get the value. Here it is not given. He has not encashed anything. So we are calculating this value like this. So it is 5 months. Now what we have to do? Date of retirement. So you got that 5 months is the leave at credit. Now if you see that average salary we have to calculate. So date of retirement 13/2/25. So salary for the last 12 months 14/4/24 to 13/2/25. 10 months. I told you fraction of the month meaning we will calculate from February to January 13. February 13 to January 13, that's 1 month. Then January 13 to December 13, that's 2 months. Like that, if you calculate 10 months, you will get it like this. So this you have to remember, calendar year 24, his salary was 1 lakh. His salary was 1,10,000. During the calendar year, his salary was 1,10,000. 24, 1,10,000 and it was raised to 1,25,000 for 25. So here if you calculate, April 14 days are there. This now April 14, 4/24 to 13/12/24, 8 months. April May, June, July, August, September, October, November, December. 8 months. See, we are not April to May, 1 month. Like that you have to calculate because it's fraction of the month. Then May to June. Like that you will get 10 months. So 1,10,000 into 8. 8,80,000. Now here again another 17 days is there in December. Because December up to 13th only we have calculated. December has got 31 days. So if you take 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. So here you have to remember 17 days are there. So now how you calculate salary for 17 days? 17 into 1,10,000 divided by 30. Always it's 30, not 31. So the value is 62,333. Now January salary is 1,25,000. Jan salary is 1,25,000. It's given in the problem. January 25. Now February 13 days. Feb 13 days, how you calculate? 1,25,000 into 13. Here also it's divided by 30 only, not 28. So here the value is 54,167. So total salary is 11,21,500. This is for 10 months. So average salary is equal to 11,21,500 divided by 10. 1,12,150. This is the average salary. So two difficult computations are over. Then now we can calculate the statement. So that is actual. Okay, now actual leave encashment received is 18 lakhs. Title should be there, that's compulsory. Table showing the computation of taxable leave encashment for the assessment year 25-26. And the person's name also of Mr. K. Now let's exempt least of the following. So first one will be the actual value received itself. So this is 18 lakhs. Second is statutory limit 3 lakhs itself because he has not claimed before. Now third is 10 months average salary. So 10 into 1,12,150. So that value is 11,21,500. Now leave at credit we calculated 5 months. Leave at credit into average salary. So 1,12,150. So this value is 5,60,750. So least value is 3 lakhs. So exempted value is 3 lakhs. Taxable leave encashment 15 lakhs. The least value always I'll show it in a box and I'll put a tick mark. So it's easy for the examiners to identify. Now next one, the last problem we'll do. It's simple. He is retiring on the end of the month. So if he is retiring in between the month, computation is little difficult. So you do it again and again, then you will remember. Then you will learn the adjustments. Okay. Mr. G retired on 31/10/24 after 20 years of service and received 18 lakhs. So 20 years of service is important as leave encashment for 12 months. His employer allowed him 1.5 months of leave for every 1 year of service. That we have to ignore because income tax 1 year is equal to 30 days only. Private or anyone, they can give whatever they want for their employees, but we will not consider for tax computation. He has already encashed leave for 18 months. So the information is direct. 20 years he completed, 18 years he has encashed. So that meaning leave at credit is only 2. His salary for 23-24 was 1,50,000 per month. And from 1/4/24 salary was raised to 1,60,000. Compute the taxable leave encashment. So leave at credit 20 minus 18 we got as 2 months. Now average salary we have to calculate. Table showing the average salary. 10 months 1/1/24. 1/1/24 to 31/10/24. 31/10/24. So here 1,50,000. January, February, March. He has got 1,50,000. 1,50,000 into 3, 4,50,000. 4,50,000. Now April onwards he got 1,60,000. So 1,60,000 into 7, that is 11,20,000. So total 15,70,000. Now this is for 10 months. So 1 month salary divided by 10. So that is 1,57,000. 1,57,000. This is the average salary. Now the computation is very simple. Computation is very simple. What we have to do? This computation title should be there. Actual leave encashment. Actual leave encashment received. You have to write it in the outer column. 18 lakhs. 18 lakhs. Now let's exempt list of the following. One is actual itself. 4 values will come here. Actual 18 lakhs. Statutory limit 3 lakhs because he has not claimed anything before. If he has claimed anything, you have to reduce. Now 10 months average salary. 1,57,000 into 10. The value is 15,70,000. Now leave and credit, that is 2 months we calculated, 20 minus 18 into 1,57,000. So that value is 3,14,000. So which is the least value? This is the least value. So exempted value, exempted 3 lakhs, taxable 15 lakhs. Taxable is 15 lakhs. This is how you calculate. Calculation is little difficult, but if you do it again and again, you will be able to understand. So this is what I wanted to explain in this module. Happy learning. Thank you.